Blog Talk Radio.
Good morning from sunny Orange County, California. I'm Brian Dooley, a CPA with a graduate degree in taxation, and today we're talking about the IRS supercomputer, the big brother that we really only expected in stories. My assistant is Rob the Robot. As you know, I am a fan of the virtual invisible world. And Rob, how are you doing today?
Brian, today I am feeling great.
That is wonderful. And today we're talking about another robot. We're talking about the IRS's robot. The IRS has quietly acquired a supercomputer. This computer is not the ones that we've seen for years as CPAs, which has been DOS-orientated. This has been a complete redo, and the reason is because the old computer was programmed so poorly that it couldn't be used. This computer is the type that can do facial recognition. Matter of fact, the IRS is bragging that with this computer technology, they are going to be able to do what they call a financial DNA blueprint of each of us. And as you heard about this, you may feel very concerned. As I was doing the research, became very concerned, which is why I'm doing this episode. But we're going to give you two easy ways to protect yourself. One is very easy. Both of these ways are free. There's one sophisticated way. We'll talk about that at the end. That's going to involve some of your time, some professional fees, not overly expensive, maybe $10,000, $20,000 a year. Still a lot of money, but for some people it may be worthwhile. But the first two ways will apply to everybody. Now, the IRS's robot and the supercomputer, they are working together. The robot's actually part of the computer, and it does a couple things. The first thing it does, it is, let me back up. I don't know if any of you have watched the TV show Person of Interest. It's about a supercomputer that can do facial recognition and track people. The IRS computer is just about at that level. So the first step is that it is reading every e-filed return. There's about 200 million individual e-filed returns per year. There's also business e-filed returns. And in the old days, last century, we did paper returns. We signed the return and we send it in. The computer can read every e-filed return of every American in this country, read it and analyze it in less than 10 hours. That is amazing. In fact, the IRS is bragging that even this capacity only uses 1.5% of the computer's power. It is tremendous. So obviously, the very first thing to do, the very first way to protect yourself, is not to file a e-filed return, to file a paper return. Now, your CPA may say, no, you can't do it. Well, that's just because he does not want to do the extra paperwork. You have a right, and that's a special form you give the CPA that directs him to send in your behalf a paper return, which means he'll send it to you, you'll, of course, look it over, you'll sign it. Very important. Now, the next thing we want to talk about is what's really going on with this robot once it finds you. So once it finds your return that has something that it doesn't like, it does more investigation. The IRS has already stored the last 5 years of every Facebook posting, every picture, every, in some cases, your email address, your phone number, your home address, anything that would ever be on the web. In many cases, they already have your emails, and we'll talk about how that has evolved. When the IRS gets this information, they, in effect, do a DNA profile of you or a profile of you, and then the function that's called the robot audit steps into the system, and it puts together the audit report for the agent who's going to audit you. it gets a little worse. This agent himself or herself have been trained. They have a 38-page manual that shows them how to actually get onto the web, drill down deep, and find out more information or clean up some of the items that may be not clear from the IRS computer. And then they start the audit. So when they come into your office, they may be asking questions that they're going to trick you with. Make a false statement to an IRS auditor, it is a crime, a big crime. So I asked my robot to take a look at their system. So, Rob, can you find that report you were putting together for me?
Yes. Brian, I will find it.
Okay, as he's finding it, I just want to let all of you know that your Facebook postings and pictures are going to be important, and we'll discuss that in a second. Okay, Rob, go ahead.
Well, Brian, I was shocked at the extent of and the type of information that the IRS has acquired. It has gathered the audio, video, email, photographic, and your internet searches. The IRS robot is gathering and has gathered information using a business named Common Crawl. It crawls and archives the web. Common Crawl has made 6 billion web pages of data from 2008. There are other information sources for the IRS robot. The robot is sifting through the publicly available information, such as lawsuits, sale of property and car registration, and your private emails. It is searching for email addresses on Google and is reading through LexisNexis and other databases that compile evidence of consumers' online presences. Recently, the American Civil Liberties Unions disclosed that the IRS has stated that it does not need a warrant for your emails older than 6 months. While one court has told the IRS to stop, they have refused.
Thank you, Rob. And let me go into a variety of sub-points with that. One is that the court that told the IRS to stop is the Appeals Court of the 11th Circuit. I'm sorry, the Appeals Court of the 6th Circuit. We have 11 appeals courts in the United States. They are the law of the land unless the Supreme Court takes on one of their cases and decides differently or even agrees. Once the Supreme Court decides, the Supreme Court case is the law of the land. Now, when an appeals court decides a case, it's the law of the land only if you live within that district. So, for example, the 6th Court of Appeal is only for the states of Kentucky, Michigan, Ohio, and Tennessee. The rest of us, the IRS can get our emails. So what happens in the United States, we have different tax laws. In fact, different laws, but in my show, Tax Talk is tax laws. We have different tax laws in different parts of the country. Sometimes in tax planning, you form a corporation in part of the country which has the law you want. These court case laws are called common law. Common law is laws created by a court. The other kind of law in the tax code and regulation or by statute. So the way the IRS get this is under the Patriot Act. The Patriot Act is being taken to the places where many of us feared it would go. We all were promised that it would never go to this point. And we saw on the news today with the Verizon phone calls being tracked by the government that this is occurring. The IRS has the same authority as the other part. These agencies share information back and forth. So part of this blog talk is to teach you how to game the system, how to actually turn it to your advantage, maybe even save some taxes. Because keep in mind, I'm sorry, Rob, but it is just a robot. It doesn't have intuition like we do. So, Rob, can you kind of go on with your report so that the audience can kind of get some more information?
Yes, Brian. Lawyers and watchdogs groups such as the American Civil Liberty Union are concerned about the sweeping changes being implemented with little public discussion or clear guidelines. Congressional staff sources say the IRS use of big data will be a key issue when the next IRS chief comes to the Senate for approval, since the last acting commissioner was forced to resign.
Thank you, Rob. And this is where predicting the IRS's robot is a little difficult because or the IRS supercomputer. It depends on who's programming it. Are they programming it just to find people to audit in a way that's legitimate? Or are they looking for audit candidates and political enemies? And the political enemy thing, I don't want you to think that I'm against Obama or for Obama. I'm very neutral, especially with this show. When I was growing up in the 70s, Nixon used the same tactics. By then, of course, he didn't have a supercomputer, but he went after his enemies. So anybody that has control over this supercomputer can actually game the system to their advantage. Until our free press finds out, we're all at their mercy. So once you make a post on something, or post a picture, even if you delete it or if it disappears over time, the IRS's system has it saved. They saved every post from everything you can think about for the last 5 years. Now, what I suggest is that in your post, and this is really hard for me to suggest this because it's so not American, that you do not criticize either party. Matter of fact, you don't even criticize the tax system. The IRS computer went after people who criticized the tax system. You never talk about abortion. You never talk about your views of religion. Don't talk about the new home you bought, because that will really get the IRS supercomputer wanting to audit you if it's an expensive home. If you have a big wedding for your children, don't mention that, because the computer will want to know how you paid for that. Of course, never talk about anything that is in the news currently, global warming, immigration, all those things can get the robot to bias its decision to audit you. Rob, I know you've been snooping around, which I'm proud of, on just how this supercomputer and robot works. Can you tell us what you found out?
Brian, this is what my snooping found. The IRS robot looks at 80% of all tax returns electronically. It does not look at paper returns. It does not look at trust tax returns. So, one important item is not to file your return electronically. File a paper return. Next, the robot does what is known as real-time scoring and selects returns for auditing. So far, the robo-audits have caught mostly low to middle income taxpayers whose returns were frozen by the robot. Sadly, the robot messed up and most of the returns were later found to have been filed correctly. Next up for robo-audits are small businesses. This is a complicated task. I expect programming errors to occur. Since the robot can only read electronically filed returns, our listeners can protect themselves by filing only paper returns.
Thank you, Rob. Now, can you also find that report that explains how the IRS computer compiles their audit report?
Okay. Brian, the IRS robot has big data tracking capabilities. Consumers are already familiar with internet cookies that tracks their movements and sends them targeted ads that follow them to different websites. The IRS has brought in private industry experts to employ similar digital tracking, but with the added advantage of access to Social Security numbers, health records, credit card transactions, and many other privileged forms of information that marketers don't see. I found out the IRS Top Gun, Dean Silverman, bragged that private industry would be envious if they knew what our models are. I also found in trade presentations that the IRS is using what is known as a parallel computer system that can analyze data from different networks to find irregularities and other activities that it has decided are suspicious.
Amazing information, Rob. Thank you. Now, when I first started working, and I've been working in a long time, I started very active in the late 60s, early 70s. In my training, my mentorship, I was taught that the IRS had a special department that went through the social part of newspapers and looked at stories about weddings, deaths, all types of things, and looking for wealthy people to audit because they get more taxes from wealthy people. And then they would find the person. They would then order the return to be sent to them. The return, of course, was a paper return that would take a month or so. They look through the return and see if it made sense. So this idea of profiling people is not new. It is these other aspects of creating this DNA blueprint of us that can be used for other purposes. Now, Rob, once the IRS has put all this together, that's a tremendous amount of information. I think the audience will be amazed, as I was when I heard your report, on just what the computer does with this.
The IRS robot processes tax returns by checking them against data from third-party records of all credit card and electronic payment data providers. Also, the robot is using data from social media and other online activities. Despite a warning by the IRS's own advisory boards, the administration is having the IRS move ahead. The robot charts and analyzes social media such as Facebook. It sorts personal data into 32,000 categories. It uses social media in verifying claims made on tax returns. If the claims are not verified, the robot does more investigation in creating the 32,000 categories. The robot is programmed to analyze taxpayer behaviors, analyze relationships based on Social Security and other personal identifiers, track email patterns and internet addresses, and match returns to credit card payments. The robot can analyze your relationships with other taxpayers, such as your contacts on LinkedIn or your tax preparer. The robot is looking at each tax preparer client's audit history with the IRS.
So this is what's unsettling. Your LinkedIn database, your contacts, your Facebook friends, if they were involved with something the IRS didn't like, that you may be associated with them because you know them. And then the supercomputer does a lot more work before it makes that decision. So when we see this DNA making of our financial lives, one method that's been used for other anti-government intrusions for 1,000 years, been used by the English, is trusts. Now, trusts were first started during the Great Crusades, and this is why. You go off to war for a couple of years. If you die on the battlefield, your family may never know. I mean, this wasn't like it is now. And in the feudal system, when you pass away, and then there's a law that you're presumed dead when you don't show up for a period of years, all the property reverts back to the king, reverts back to the crown. And then the king, whoever the king may be, gets to decide who can have the property. So what knights would do when they went off to battle, they would transfer their title to a friend with the understanding that the friend would take care of the family, the wife and the children. This is what a trust is. A trust is when you transfer property to a trustee, somebody you trust, and they have a legal fiduciary obligation to take care of your assets. Trusts in the United States have been used historically for estate planning, but some innovative, provocative tax planners use it for income tax planning, and I've always been a big fan of a trust. In 1996, a special tax law was passed to make trusts even more useful for this. And the way this law works is that when a trust owns the stock of a S corporation, it becomes the only taxpayer. So when the return gets filed for the S corporation, it doesn't show any human being as the owner. It shows this trust. A trust can have any name you want. You can call it ABC Investment Trust. The trustee in many states, my favorite state's Nevada, can be a corporation, which also can have any name you want. States like Nevada and Delaware are famous to keeping the corporate information not public, because the computer won't pick it up. So this method is called having a private trust company. That's the corporation, that's the trustee. You would form the trust. The trust then would own your business activities, your businesses, your investments through an S corporation. So on your individual tax return, all they're going to see is something really boring. All the computer's going to see is maybe a wage on a W-2, your itemized home deduction, which the computer gets on a Form 1098 from your bank, your property taxes, maybe state income tax. No donation to charity should show up on your return, nor should be made by you, because that can cause an audit. And that's been the case for a long time, but even more so now if you make it to the wrong charity. With this trust, the trust makes the payment to the charity, and it's a special way for a trust to do it that gives you even a better tax advantage. So those of you who want more information can either give me a call, of course, 949-939-3414. And I've started a video live chat for brainstorming. Just go to my website. You just give a link. If I'm in the office, you can talk to me. Go to my meeting. It's very easy, very nice, and actually kind of fun. So, Rob, I know you did more work, and I would like to know what you found out. You were searching comments made by IRS officials who were bragging at seminars and conferences, which they thought would be confidential. So we're getting kind of into the backside here, where they were kind of bragging and telling things they shouldn't say. What was it that you came across?
IRS officials had been outlining plans at industry conferences, working with IBM and other private sector specialists. In presentations, officials have said they will use the big data for 1. Charting and analyzing social media such as Facebook. 2. Targeting audits by matching tax filings to social media or electronic payments. 3. Tracking individual internet addresses and emailing patterns. 4. Sorting data in 32,000 categories of metadata and 1 million unique attributes. 5. Machine learning across neural networks. 6. Statistical and agent-based modeling. 7. Relationship analysis based on Social Security numbers and other personal identifiers. Former Commissioner Douglas Shulman said in an IRS statement that the technology will employ billions of pieces of data to target enforcement and to detect and combat non-compliance.
Thank you, Rob. Let me repeat item 4 that Rob said, because I can see he kind of said it like a robot. The fourth item is sorting data into the 32,000 categories of what they call metadata and 1 million unique attributes. So you can see it really is creating this DNA profile of us. There's been a lot going on in the courts. The tax court, now this is where most cases go. The tax court records show that information has been gathered from Facebook and eBay postings that have been used by the IRS in defending their tax cases. Tax returns are like a narrative of how people spend their money, and tax audits have been guided by reasonable interpretation of allowable credits and deductions by the IRS agents who manage the audits. So they can take this information and make an assumption. In our tax law, we are guilty until we prove ourselves innocent as far as a civil issue goes. So when the IRS wants to assess you money, they just send you an invoice. You have to prove that they are wrong. Not the same for a crime, but as far as taking your money, it's the same. Now, the IRS can use this social media to in fact have us testify against ourselves without knowing it. So for example, in 2011, I go to Florida on a business trip, and I meet with attorneys and CPAs, maybe a client. But over the week, I also visit my family in Miami. And my wife posted on her Facebook. I posted on my Facebook. Now, a casual Facebook posting to your friends about visiting family in Florida can work against me, and this is how. In 2013, let's say, the IRS audits my year 2011. The IRS supercomputer finds my posting in this database called Common Crawl. It's a firm that the IRS has organized. So it's kind of outside the governmental system. And all this information goes back to 2008. The IRS can challenge my business expense saying, hey, you're out there seeing your family. Now, if I haven't kept really great records, I'm going to lose that deduction. Under the Freedom of Information Act, a group called the Electronic Frontier Foundation published the IRS 38-page manual on how to train the auditors to search the Internet for more information. So as I was saying at the beginning of the show, they kind of tidy up what was done by the supercomputer and the report put together by the robot. Now, Rob, this is a pretty powerful computer. Rob, what did you discover about this computer's power? Is it really this powerful?
Lots of computing power, Brian. Lots. Get this. The IRS computers can now read all the United States tax returns in just 10 hours, compared with the 4 months 8 years ago. Jeff Butler, the IRS Director of Research Databases, told the IBM Tech America conference last November. The IRS says it expects 80% of its tax returns to be filed electronically this year. That makes a total of 250 million returns filed, but processing those returns uses only a fraction of the IRS computing power. An entire year of tax returns amounts to 15 terabytes, or just 1.5% of the IRS storage of 1.2 petabytes, 1 quadrillion bits of information, based on public data from IRS presentations. The agency has expanded its data capacity by 1,000% in the past 6 years.
So, this is where we are. If for those of you that have a CPA, there's 2 items I want you to pass on to him. I will put on the show notes the link to the IRS forum that tells your CPA to file a paper return for you. And Rob, can I have you find that link and put it on our show notes?
Yes. I will put the link on the blog talk page for this episode. Great,
thanks. And the other items for your CPA, for those of you that want to explore this type of a trust, there's a code section. This law has been around, like I said, since 1996. The code section's 1361 is called an electing small business trust, so the name's very good. It's a very pro-business law, and I encourage all of you to be very proactive and to also join me on my video chat. It's lots of fun. And I think this is it for today. If you have any questions, give me a call or text me at 949-939-3414.